Holy cow, the Upstart stock posted record massive earnings and the stock popped like 25% just the day that they announced it. And so in today's video, I'm going to break down those earnings reports, give you my intrinsic value per share, what I think the Upstart stock is worth today. Then I'm also going to break down the chart and give you those levels that you should be looking to buy, and then also profit targets of where the price could go in the future. So let's jump right in. What's up, guys? Welcome back to This Just In. Thank you so much for joining me today. My name is Justin and I am your host. In today's video, we are going to take a look at the Upstart stock. I made a video on this company a couple of months back. It was a little bit overpriced for me back then. I said in the video that I was not going to be buying it long term, but I did have a trade setup that I went over on the chart and it played out beautifully. And so today we're just going to focus on the full year 2021 earnings. We're also going to take a look at the guidance, and then I'm going to give you my discounted free cash flow, like intrinsic value per share of what I think the Upstart stock is worth today. Then I'm also going to break down the chart for you. We're going to take a look at the recent price action so that you know the levels that you should be looking to buy, if you should be, waiting, or if it's at those levels now, and then also where the price could go in the future once we kind of get above the major levels and back up into an uptrend. So if you want to see me, go over the chart, if you want to kind of get an idea of what I think the price targets are, definitely stick around till the end so you can see that. Real quick, guys, before we get started, subscribe to the channel if you want to see more videos like this. Like the video so it gets out there to more people, and come over and join us at the Patreon if you want to get all of our trade setups and be part of a great family. Day One Squad, I love you guys. Thank you so much for your support. It really does mean so much to me. But let's jump in, guys. First thing we're going to take a look at. So this is just kind of some highlights from their earnings report. Guys, for those of you that do not know who Upstart is, I'm not going to go super in depth on who the company is. If you want to see that, I will link my previous video right here so you can go check that out. They're essentially an AI-driven lending platform. So they essentially have a software, an AI software that they partner up with banks, and it pretty much analyzes somebody's credit score based off of like thousands of different metrics. So the traditional, credit scores like TransUnion, Equifax, and Experian, they only look at like a certain metrics, right? A small amount of metrics. It's been the same for a long time. And so there may be people out there that, can't get a loan for a car or a personal loan or whatever based off of those three traditional credit scores because of, issues they've had in their past or things like that, happened to them. But Upstart can put them into a position where they can evaluate way more metrics and get them financed, if they are a good person to lend to because they will pay their payment and just end up being, a good consumer for the bank to lend to when, if they would have used that traditional credit score system, it would not have worked. Very cool platform, guys. It helps, get way higher approval rates. It's way easier, faster, more reliable. Not only do they get more people approved, but they also get better, higher quality people approved. So it's a great software. If you want to learn more about it, go check it out. We're going to focus on the nitty gritty today. So you can see right here, guys, this company is growing at a pretty exponential rate. I mean, it's a relatively small company still, right? I mean, they're only doing about 849 million for the year of 2021, which is obviously almost $1 billion, still a lot of revenue, but nothing in comparison to like what we looked at yesterday or 2 days ago. PayPal doing 25 billion in 2021. So relatively a small company. Their revenue growth, 264% year over year. That's insane, right? But look at it, all the way back from 2017, 57, 99, 164, 233, 849. So just, really consistent revenue growth year over year over year over year. The contribution profit has also grown pretty substantially. You can see right here, income from operations, 141 million, up 1,000%, almost 1,100% year over year. Contribution profit, 398 million, up 279% year over year. The net income, 135 million. So they are profitable to the bottom end. They are bringing in, net money, cold hard cash at the end of the day. And that was up 2,100%. That's just Obviously insane, amount of growth there on that bottom end. If they can keep that up, that would be huge, but it would be very unlikely that they're going to continue to grow at 2,000% on their bottom end year over year over year, right? So you will start to see that come down, but nonetheless, still making money there, and that will continue to, hopefully grow in the future. Adjusted EBITDA, guys, 232 million, 27% of their revenue, and it was up almost 1,400 basis points year over year. So very strong financials there, guys. Record earnings for them in not only full year 2021, but also Q4 of 2021. So one other thing I want to take a look at real quick is this auto opportunity, guys. So if we take a look here, I want to say that a majority of their revenue comes from like personal loans and things like that. But take a look at how much they are expanding into auto refinancing, with dealerships across the nation. They are expected to do 1.5 billion in total financing volume in automotive only in 2022. That's massive. They tripled their dealership footprint year over year, and they grew 41% quarter over quarter in Q4. The other thing I want to point out, guys, is their auto refi funnel performance is now comparable to personal loan funnel. That's insane, right? If they get to the point where their auto financing is bringing in the same amount of volume as their personal loan, financing, that's big. That will really help them scale their revenue. They just added 10 bank partners that signed up for their auto lending program. So, obviously good to see there. You can see here, this is how many different dealers that they have, per quarter. In Q4 2020, they only had 111. And in Q4 2021, they had 410. So big growth there. Next thing, guys, is their guidance. This is the reason why the stock popped so much. The reason why you're seeing a lot of the tech stocks get murdered on their earnings reports like PayPal did, Facebook, is because their guidance is soft. Their earnings were strong, but their guidance was weak. If you look here, guys, in Q1 2022, they're expecting to do 295 to 305 million, but in full year 2022, they're expected to do 1.4 billion. So they're going from, 860 something million to 1.4 billion. They're almost growing their revenue at, 50, 60% again. So very impressive. That's more than that. It's like 70%. So big there. A contribution margin, approximately 46% in Q1, and going to end the year about 45% is what they're guiding for. Net income in Q1, going to do about, 18 to 22 million. The big thing that I wanted to point out, guys, is take a look down here. The auto transaction volume, again, 1.5 billion, and the adjusted EBITDA, going to do about 17%, full year 2021. Now, their cash flow margin is currently sitting at about 18%. So it's right there in line with their adjusted EBITDA. If they can continue to grow that, free cash flow margin, that would be very impressive. That's exactly what we want to see. If we jump over to the discounted free cash flow sheet, I want to point out a couple of things here. So the last time we did this, we used some pretty aggressive metrics, guys. I am using a 40% revenue growth from today for the next 5 years, okay? So that's a little aggressive in my opinion. Yes, they may grow at 70, 80% in the next year, but the 4 years after that, like, are they going to maintain growing 40% every year? I doubt that. That's really aggressive, so I would like to pull that down a little bit. And I did their free cash flow margin at exactly what they're doing today. When you do a discounted free cash flow sheet like this, guys, you typically want to be a little more conservative than that, because if you, overshoot it, you could put yourself in a bad spot. So right now we're coming up with about $137 per share for intrinsic value, with a 40% revenue growth for the next 5 years, 5% in perpetuity after that, discounted 10% with 18% cash flow margin. If we drop the revenue growth just even, down to 30%, that brings our share price clear down to $96.66. If we bring it back to 40 and we drop the cash flow margin to 15, brings our, price down to $114.50. What I would probably like to do, guys, is let's leave that cash flow margin at like 15%. we'll give it to them that hopefully they're going to continue to grow it and it's going to go up from 18%. But we'll leave it at 15 and we'll put the revenue growth at, let's do 25% just to be super conservative. I think 25% is very reasonable for the next 5 years. That gives you $66 a share, guys. So the stock is definitely a little overvalued today based off of like traditional metrics, if you are not giving them a huge discount over all of the other companies. So for example, I did I don't usually go over this, but this is kind of like a PE, a targeted PE analysis. So I put in a lot of their different competitors. So Lufax, Alley Financial, Lending Club, Green Dot, and it gives me an average PE of about 49.8 for all over the course of all of them. Upstart's currently sitting at 84 right now. That's expensive, right? Like that's a huge PE ratio. If we give them no discount over those other companies, the target PE would be 49.8. So that would put the target price about $80, okay? If we give them a discount, like because we say, they're growing way faster than these other companies, they deserve to have, a 25% higher PE than these other guys, that puts our target price at $100. And if we put, even a 50% discount over these other guys, $120, we would literally have to give them like 75% discount to even get in the range, around $141. So all I'm saying, guys, is it is a little overvalued right now. It's it's running a little hot, but with such insane growth, you could potentially justify it. I would like to think that it could potentially come down a lot lower. However, if they can continue to maintain these growth rates, then maybe, this is a totally fair price. So that's kind of where you have to decide, like, do I think Upstart is going to continue to grow at this rate for the next 5 to 10, 20 years, whatever. You got to make that decision. I personally would rather stay a little bit more conservative and kind of focus on more so swing trading them. However, that's kind of up to you. Last thing, guys, if we jump over to the chart. This was a beautiful looking chart. Who remembers this video, that I made a couple of months ago on Upstart when we had the textbook 3 Rising Valleys on the weekly, guys? On the weekly, look at how that played out like a dream. We literally made the video as it was breaking out of the 3 Rising Valleys. First valley, second valley, third valley. Use your measured move from the highest peak to the lowest part of the first valley. That's your measured move. It back tested it and it went insane. It passed the measured move of like, $340, and it even peaked out up there at like, $400. Insane, right? Insane. I honestly had no idea that it was going to hit that price target that fast. I said in my video, I think I said it's going to take months and months and months and months, but it didn't end up taking that long. It took like 2 months. So very powerful stock, guys. I mean, you saw what happened when they announced earnings. It was up 25%, 35% in the day. So the one thing you gotta keep in mind, though, you are under a major inflection zone right now, and you just back tested it as resistance. So look right here. The way that you map out these inflection zones is the first time something happens. So the initial candle high close from back on March 2021, the 22nd of March 2021. First test, second test, and then when it went for it again, it gapped over it, back tested it as support, and then it went to much higher prices. So we now found support, attempted a rally, couldn't make a higher high than the previous high, dumped again. When it dumped, guys, what happened? It back tested it as resistance, and then it went to the next level. So now we stuck at the next level, and then we released insane earnings, and then it rallied. And when it attempted a rally, it back tested the bottom of the zone as resistance, and you are getting perfect follow through price action to the downside. So you really got to get up there and you got to make a higher high than the previous discernible swing high. If you don't, and you come back to test this again, you could absolutely break that $91 price mark, and you could see, I don't want to say it, but $48, because if you break $91, you're probably going to see $50, $48, $50. You're going to go back and close that gap that was never closed, so at least, 60, 62, $63. However, what you could be seeing right now is maybe you're getting like an inverse head and shoulders type stuff. So you've got like your left shoulder and then your head, and maybe you are working on building your right shoulder. So, you would need to obviously see it, continue to sell off, right? And then kind of pivot, find support, but you're pretty much trying to find support right in the middle of a range. And then you would need to come up here. I wouldn't take the trade until you broke that level, back tested the zone, and then you're off, right? Because if you just tried to, take it at the zone, you could just, up thrust and then dump below it and go all the way back down to $100. So, maybe you're seeing something like this, guys, who knows? But you're dead smack in the middle of a range right now. You're headed back to fill a gap. I mean, you can't take this trade right now with any type of certainty because, again, you're dead historical price action. When it breaks $100, straight up, straight down, straight up, straight down, straight up, straight down, straight up, straight down, straight up. So gotta wait, guys. Gotta be patient. If you take a look at the oscillators, you were, building fresh positive momentum, but you are now starting to wane, just a little bit. One thing I will say though is you've pretty much got classic bearish divergence, guys. I mean, hidden bearish divergence from this high to this high. You made a, slightly lower high. So that's, classic hidden bearish divergence, which is a continuation to the downside, being implied. So one thing I will say is your relative strength index is currently sitting at about 55 right now. You may, again, pivot here, back test the neutral zone, and then run straight back to the bullish control zone, which you're in right now, and run to much higher levels of relative strength. Again, you back test, this zone up here, that would be an exceptional trade, right? You'd have the inverse head and shoulders. You'd have the measured move, just like you did, with the 3 rising valleys. And, that could take you to, much higher prices, which would be, right up there confluent with, the gap. So something to keep in mind, guys. You definitely could have something in the works here. The other thing I want to point out is if we take our fibs from the all-time IPO price to the all-time high, I mean, guys, we are right there at those, those deep value perceived areas, not quite to the 886, but we're sitting at a 78% retrace right now. So this absolutely could be the level that you get that major reversal. Again, you are under the 200-day moving average. If we jump over to the weekly, you did get, a pretty significant, candle being painted this week. And, you very well could be, starting to change directions. So you just got to be patient. Let me know what you guys think down below. Let me know if you agree with my analysis, guys. I think as soon as you break 166, guys, you're going to see 289 like that. Honestly, that's look, you break it, you go straight up to, to 289. You break it, you back test it, you go to 400. So, I think that there's just not enough levels up here that is going to stop you from making, at least 220. At least 220, which is that candle close from back in, August of 2021. So be patient, let the right shoulder form if that's what's going to happen. And what would happen, guys, if this continues to sell off and form, you would get lower levels of negative momentum on the MACD, and you would create hidden bullish divergence from your head right there with that one little histogram wick right there. And, that would be implying a continuation to the upside. That is exactly what you want to see on your oscillator. So this video is for entertainment purposes only, guys. I'm not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. If you have any, questions for me, let me know, and come over and join us at the Patreon if you want to be part of an amazing family. And I'll see you guys in the next one. Peace.